he's a pattern man, but he doesn't ignore the fundamentals.
Another episode of the Love and Hustle Show.
Traders, it couldn't get any easier than this as it relates to this Canadian dollar, Japanese yen, Swiss franc, okay? About 3 videos ago, February 19th, all right, I recorded a video where I basically said traders overlook this particular area in Forex or in trading in general all the time. And I said this about the Canadian dollar. All right, take a look. This was recorded February week 2. Correlation. So when a trader tells you, oh yeah, oil and the Canadian dollar, they're highly correlated. Not all the time. Because again, right now you're seeing that this oil market is running to the upside. Meanwhile, this Canadian dollar is barely being able to break outside of this price range here. Now, are we keeping an eye on that? Yeah, because at the end of the day, there's a lagging effect. If you often see that oil markets are screeching to the upside, sometimes you might have some buy-side pressure here on this Canadian dollar, and that's something that we are looking for. Kyler specifically mentioned that there might be a pretty awesome opportunity there. And so if we go and look at the charts, guys, the single largest price move that we've seen in 2021, all right, has been this Canadian dollar. We mentioned that there was it was a really good opportunity to potentially catch this Canadian dollar outside of this range. This is the Canadian dollar index. Okay, so if you guys are not familiar with how we trade in particular, this is the Canadian dollar index. It's the Canadian dollar versus all the other currency pairs. All right, that gives us an idea as to what's happening on the Canadian dollar. It isolates the currency for us, and we noticed that was inside of this price range. In that video, I said, hey, look, all right, that video is about correlations. Oftentimes, you do see an uncorrelated phenomenon happening with the Canadian dollar and oil. But when oil does this, all right, I want to show you guys what oil is looking like right now. I'm going to have to duplicate my Thinkorswim over here. Bring it on down. I want to show you guys what Brent crude is up to, okay? Because it went absolutely parabolic over the past, let's say, 3 months or so. All right, so we'll head over to Brent crude. Brent crude is basically just a futures. It's a futures instrument tracking oil, specifically Texas. So let's see, 3 years out. Take a look. So 48 bucks. Now we ran to 65. That was just in 2021. But if you guys remember, we made this massive low in end of 2019, beginning of 2020, and we just ran from that low just absolutely just very, very quickly. And we had a correlation over there with the Canadian dollar. So if you guys will notice, when oil spilled so dramatically, you guys can see, if I head over here, this is our Canadian dollar. You guys can see this massive sell side move that we saw happen. Here's our 2019. Okay. If we head over to 2021, you guys can see it again, another enormous sell side move. Now, when did that move happen? February 2020. All right, well, if we head over and take a look at oil markets, and if we go to 2020, what do you see happening? February 2020, we get a massive sell-side spill. So there was at one point a very high correlation between oil and the Canadian dollar, but then it started to not be so correlated. Notice we get this massive run here on the oil markets, but if we head over here to our Canadian dollar, we didn't get anything. And so this thing has just been piling up to just have this aggressive buy-side, just parabolic move, and that's exactly what we got, and that's what we've been looking for, and that's what we've been trying to rail on with all these FX people who, you know, are very, very much into the technicals. But, you know, one thing that they don't mention, though, is that, hey, look, you know, in Canada, a tremendous amount of Canadian GDP is dominated by oil companies, so on and so forth. And we've been talking about this trade for a while, along with many others that pair with that risk aversion opportunity that we've seen happen here in 2021. It's been the biggest trading opportunity. We're going to talk about that in just a second, just in case you guys are not up on what's happening risk aversion wise in Forex. But if you are not, subscribe to the channel, turn on your post notifications. Okay, we talk about this on a consistent basis. One of our guys, Boris, he's been playing this like an absolute animal all the way back March 1st. So we're looking around right now. We just ended March week 2. And, you know, he was saying Euro CHF long, Euro GBP long, GBP CHF long, CAD JPY long, CAD CHF long. He was playing that risk aversion opportunity along with that Canadian dollar opportunity. And it just created the single largest price move that we've seen happen inside of Forex in quite some time. Take a look. Okay, so whenever you play economic divergence, it's the #1 way to trade FX. There is no other way. It's mathematically, statistically proven. You got to find the best currencies to trade with the weaker currencies. And the only way you can really do that is using fundamentals. You can't really use technicals with that because you have to have the indexes. There's an overall philosophy and process that you have to go through to be able to set this up the right way. But once you do, you almost never miss opportunities like this because they become blatantly obvious. This is how SunTrust Investment Management trades. This is how Loma Management Partners trade. This is how Renaissance Capital trades. Okay, so the largest firms in the world that trade macroeconomics, they usually are doing it with some economic diverging model, and that's what we do inside of our boot camp. Link in the bio, okay? So anyway, I want to show you guys this real quick as well. I want to head over to the JPY, just in case you guys have not been up on what's going on. Melting, okay? Japanese yen absolutely melting. You don't have to hope Bitcoin hits 100,000. You don't, okay? You don't have to hope Ripple doesn't, you don't have to hope Ripple gets listed back again on Coinbase. Now, again, are we long crypto? Are we playing crypto? Of course. But the cool thing is, all right, once you understand fundamentals and once you understand how to trade from a skill set perspective, you can make money at any point in time. You don't have to rely on cryptos shooting to the moon and these just really random, hopeful, wishful thinking scenarios to pan out where, oh man, I hope I can flip my account, with this crypto from, $100 to 10,000 or whatever the number is that you're looking for. You don't got to hope for that when you build a skill set, because you can basically just show up to the market, know what an opportunity looks like, whether it's FX, whether it's stocks or whatever, and then execute, right? Now, there's a lot of assets going parabolic right now, all over markets, okay? I mean, you can pretty much throw your money in almost anything and do okay, all right? That's just true. But the good thing about having trading as a skill set is when the markets are going up, you're able to capitalize and maximize on those returns. You're able to feel when you feel like those returns are going to subside, liquidate, get back in on the lows, maybe even take it short. So you're able to maneuver around financial markets in a much better capacity when that skill set is built. And that skill set for us is based around price versus value. So we like to see the price of these assets here. So we can see JPY, the price of this particular index is just shredding sell side. But where's the value? That gives us where we believe this JPY could go. And the value where this JPY could go, I mean, it can go a lot lower based on what we see happening right now. Now, here's the cool thing about what's happening on the JPY. Let's take a look at the Swiss franc. What do you see? Massive sell side. Let's take a look at the US dollar. A little bit of an up move, consolidated down here at the lows, but at the end of the day, we see a massive sell side trajectory happening right now. So when you get this much correlation across all of our safe haven currencies, it's pretty much the easiest trade in the book. It's almost free money. And this is one of those scenarios where, again, just like in crypto or just like in stocks, when basically you see something happening, hey, if you are aware as to what's going on, you throw your capital to work, all right, put your capital at risk, and more than likely it's going to play out if you understand the components as to what's happening behind the scenes here, okay? So it's amazing, man, what's been going on with this Canadian dollar. I was talking to Kyler a little bit earlier, and he said Canada did also come out with some really good economic data, and that's what drove this Canadian dollar massively. If we pull over, this is a weekly. Let me go to the daily. Look at how much this price move was dominated by the fundamental data, all right, that came out about the Canadian dollar just on Friday, okay? So right now, fundamentals seem to be coming into the picture a little bit more than they were before. Market participants were very afraid to try to do anything or rationalize how well an economy was performing because of COVID, okay, because of political risks. I don't know if you guys remember, but there was a lot of turmoil and there was a lot of friction in the overall global economy as it relates to like just nations in general. And, what was happening was people were undermining, okay, yeah, GDP might be up, but, there are hundreds of thousands of people dying at this crazy rate. Who cares about the numbers right now? Now, it seems as if, since things are calming down with COVID-related issues, it seems as if the fundamental data and how the economies are actually doing is playing a bigger role, which means if you get fundamental data that comes out about any of our reserve currencies, more than likely, we're going to start to see some price action. So when we get an NFP number that comes out, when we get an average hourly earnings that comes out, when we get CPI, GDP, PPI, okay, we're going to be keeping an eye out on all these numbers. We're going to be starting to talk about them a lot more now since, maybe COVID's calmed down and we can start actually entertaining what's happening in the actual economy. It's going to get real exciting. All right. So guys, look. This trade is still happening, okay? The overall idea that risk aversion and that market participants are throwing their capital to work in riskier asset classes, that's why you're getting the Canadian dollar pop. That's why you're getting the Australian dollar, again, moving higher. If you look at the long-term view there, even on the euro, you're starting to see a little bit of euro sputtering around down here at the lows. Euro's been hit pretty hard. All right, so if you guys have any questions, let us know. If you guys want to learn more about economic divergence, the link is in the bio. Make sure you guys like the video for your boy, okay? We'll be coming back next week with a lot more content. Talk to you guys soon. These are some amazing trades. All right, holy cow. See you guys next week. Peace out.